how the business world now is reacting to all of that. Stephen Carroll, our business editor, is joining us here on set. Stephen.
Stuart, we've seen stock markets plunge on this latest news that Russia has recognised those two breakaway regions of Ukraine. At the same time, oil and natural gas prices have jumped over fears of what this all might mean for global supplies. Let's start with a wrap of how things are looking on the oil markets today. The international benchmark Brent Crude surging over $97 a barrel, up around 2%. WTI in the US also up to almost $95, up by almost 4%. We're looking at oil prices at their highest in 7.5 years, and it is again showing us the global nature of how this is impacting markets. If we take a look at the stock markets, the main index in Moscow, the MOEX, down sharply for a second day, 4% down. A short time ago, it was down by 10.5% on Monday. The value of the ruble has also slumped against the dollar. That's trading around its lowest level in 15 months. European share markets have just begun trading, and they're sharply in the red at the start of trading today as well. London, Paris and Frankfurt, you can see sharp falls there across the board. Among those seeing the biggest falls, travel and leisure companies, banks, mining companies all being hit. There are some oil companies actually seeing some gains due to the rising oil prices. BP is among those that saw their shares up at the start of trading in London. On the Asian markets, a similar picture again. Big falls on many of the bourses there too. The Nikkei in Tokyo down 1.7%. There are big falls too in Hong Kong, but there's some local issues at play there as well, influencing share markets too. But Russia, really the big story for markets today. And the question that investors are now watching closely is that of how major Western powers will react with sanctions. US President Joe Biden has already signed an executive order to stop all American business activity in the regions of Donetsk and Luhansk and block imports of all goods from areas controlled by Russian-backed separatists. US and European leaders are now considering what further sanctions to impose. British ministers meeting in London now. The EU's High Representative on Foreign Affairs, Josep Borrell, saying that sanctions will be adopted by European ministers as soon as this afternoon. Now, they had discussed a list of potential measures at their last summit last week, but all EU ministers will have to agree now on which steps to take. Yinka Oyatade has been looking at their options.
It's decision time for Western powers as they mull which sanctions to apply to Russia. While the US says it could penalise Russian President Vladimir Putin directly, other individuals in his entourage may also be targeted as part of the measures Washington has dubbed the mother of all sanctions. Putin's associates could see the freezing of assets. Travel bans are also on the table. The EU is ramping up pressure on the UK to make London off-limits for investors. The British capital is regarded as a safe haven for Russian money. Washington, Brussels and London are also examining ways to limit Moscow's access to financial markets, including banning transactions in dollars and pounds.
We're going to stop Russian companies raising money on UK markets, and we're even, with our American friends, going to stop them trading in pounds and dollars.
According to Reuters, Washington, for its part, could bar American companies from processing transactions for major Russian banks. The US has also proposed excluding Russia from SWIFT, a financial transfer service that is used in more than 200 countries. These measures could severely limit Russia's ability to trade internationally. Western powers are also considering blocking states from buying Russian gas and oil. The industry is a critical source of revenue for the government. Steps could also be made to stop the launch of the Nord Stream 2 pipeline, but Europe is highly dependent on oil and gas from Russia. Penalising Moscow could push consumer energy bills even higher.
As Yinka was alluding to there, the question of targeting oil and gas with sanctions is particularly sensitive because Russia is such a major supplier, particularly to Europe. 40% of Europe's natural gas comes from Russia and a quarter of its oil. Supplies have been reduced for several months now. European countries have been looking for alternative sources elsewhere, but they tend to take longer and are more expensive to get. That's something that Russia's energy minister has seized on in an interview this morning, saying that Europe won't be able to replace large volumes of Russian natural gas with supplies from different countries. Of course, there's going to be potential impact then for European consumers as well, and potentially in the United States as well. President Biden there warning that Americans could also face higher prices at the pump. Stuart, plenty to watch as the story continues today.
Yeah, lots of figures inevitably moving around, and Stephen will keep following all of that for us, of course, here on France 24.